Alrighty, traders, happy Sunday. Welcome to our weekly webinar. We're going to do this a little bit different today. Lately, if you guys haven't been able to tell, the markets have been a little bit slow, a little bit wacky. Correlations have definitely been, not consistent the past couple weeks ever since the Fed's raised interest rates in the U.S. So rather than going through all of these different pairs on the right, and then sometimes skipping on pairs or not having analysis for the pairs, I'm only going to talk about, I actually have 3 pairs that I'm looking at right now in particular. So we're going to just pretty much focus on those 3 pairs. And I also want to look at the economic calendar. So without further ado, let's go ahead and get started. If you guys are tuning in from our free group and you guys are interested in our premium group, go ahead and shoot me a message. And I can give you guys a little bit more information on what that includes. You can also visit our website at www.positivetraders.us, and you can kind of review all the information on there that you get as a premium member. So let's start off with the economic calendar. I just want to go over this real quick because there are a lot of high impact news this week, which could cause some volatility fundamentally speaking, but I just want to kind of review. Lots of red folders throughout the week, lots of high impact news. But one thing that I'm really focusing on is on Wednesday. Not really planning on doing a whole lot of trading Wednesday. There's actually going to be 3 different central banks all speaking. Okay, so we're going to have different governors, different presidents speaking from these different central banks. So Canadian Central Bank, European Central Bank, Pound Central Bank, and Yen Central Bank. So we have pretty much the head of these central banks all speaking at around the same time. It's going to cause a lot of volatility. So really be careful with that Wednesday, guys. Make sure you guys are aware of the economic calendar. If you guys aren't sure how to read an economic calendar, it's really simple. Just spend some time kind of reviewing it. You have the actual, that comes out when when whatever time this is set to, and you can set the time to, wherever you live. So this can be your time. So not going to speak too much on this because this is, some people find this things boring. I don't want to lose you guys' attention. So we're just going to jump right into what you guys are looking for. If you have any questions, by the way, what's up, Alex? Good to see you in here. Go ahead and throw them in the chat and I will go ahead and answer them at the end. Okay. So we're going to be talking about 3 different pairs today. The first pair I want to talk about is the dollar yen, okay, USD JAPY. I want to talk about this pair and I want to kind of just point out some key pieces of information that I think everybody should kind of have on their charts. First off, let me go ahead and actually start off by deleting this fib. And let's just look at just pure technical analysis at this point. Let's look at this level of support right here, level of support right here. This support that actually broke, you can see the support right here did not hold. We actually broke and came to the underside. We saw some resistance in this area. And, last week we saw a lot of consolidation right in this area on USD JAPY. This is my analysis, guys. I think USD JAPY is going to be good for a long and a long-term long, okay? A buy long-term once we break this significant level right here. So if you guys can see where this green box that I have marked off at, you can see this is a pretty significant level. We've seen support, seen a little bit of resistance right here, a little bit more resistance, and then last week we saw some resistance as well. So this 111.56 level is a pretty key PRZ on this chart. And we also have some nice conviction to taking a buy on this trade with price being back above this trend line. So also, if you look at it on the weekly, it also looks pretty solid for a buy. Pretty much my analysis, I'm going to just kind of draw it out for you guys. I will actually also mark something up on TradingView too and post to like an official TradingView idea with my targets. But I am looking for this to break this level. Okay. Oh, sorry guys. Just using my little drawing tool. Break this level, potentially get a little bit of a bounce in this area, and then looking to go long on this pair. We could be reaching, these previous levels. We have these previous highs up around the 118 level. Of course, we're probably going to have our first targets somewhere around this level, 115. But you guys can see right now we're below 111.50. So even all the way to our first target around the 115 level, that's a solid 350 pips for a final target of about 650 pips up, or I'm sorry, 750 pips up higher. And actually, I'm sorry, that's 450 pips, not 350. So that is my analysis on dollar yen. So again, let me just clear this out for you guys so you can all, it's very, very simple, guys. We're waiting for a break of 111.56. And when we talk about a break, we aren't talking about a break on the 1 hour, the 15 minute, the 5 minute. We're looking at this right now on the 1 day chart. So we're looking for a consistent break above this area on the daily. 4 hour would be okay too, depends on what kind of structure you get. But also another technical pattern too is we have this really nice bull flag right here. I'm gonna just drop it down to the 4 hour so you guys can just kind of see it for just a second. And you can see we've got some nice price action in this area. We've got a really nice bull flag sitting right underneath this previous resistance. When we actually pull this chart back a little bit, let me go ahead and undo this, clear this out, and just pull back just a little bit. You can kind of see that this 111.56, it makes a little bit more sense on the daily and the 4 hour. You can see support, this whole resistance, a little bit of a fake out right here. Okay, a little bit of a fake out, but ultimately stayed above this whole consolidation level before dropping. A little bit more consolidation, had a bull flag in this area, acted as a little bit of resistance before breaking it and moving up higher. Same thing on this side, had a little bit of resistance in that area, a little bit of support right here, a little bit of resistance right here, a little bit of resistance right here. And last week we saw a little bit of resistance right here. So if this makes sense to you guys, this 111.56 is definitely a strong PRZ, and we can see nice, beautiful bull flag, and it's just kind of like sitting on this trend line. So you could potentially get into an aggressive buy now. It definitely could pull back a little bit lower, maybe down to this trend line and before moving up higher. So I'm a little bit more of a conservative trader, guys. I really like breakouts. So I would wait for price to break out of this level, kind of pop up a little bit, maybe get a bit of a retest, and then move up higher. If we don't get a retest, look for a little bit of like a bull flag consolidation on the 4 hour, the daily, before moving higher. But I also think that this also goes in part with the fundamentals with the dollar right now, with the rate hikes and the dollar strengthening over the long-term period. So that's my analysis. I'm looking at dollar yen. All right. I also want to look at pound yen. Okay. Another good pair. So let's go ahead and throw this on the daily real quick so you guys can see this. Pretty clean price action, guys. Pretty clean price action. Pound yen has been, it's kind of been a little bit of consolidation in this channel. It's been in a descending channel for quite a while, but we broke out of it last week. So you guys can see, let me just, I'll scale in a little bit, but just so you guys can see this trend line. Of course, we have support right here. So ideally, this trend line is extremely strong, acting as a very significant level of support for this pair. We also can see our waves. We have our first impulse wave, first corrective wave, second impulse wave, second corrective wave, looking for our third impulse wave up, which would complete a 5-wave structure. Also, just to add on to the technicals, we had, obviously you guys can see, this channel, this descending channel that we played in for quite a while, went down to this trend line. We actually got a nice break right here, a nice retest of this channel. And so ultimately, I think we're going to be moving up higher with this pair. I would definitely tread lightly with pound yen though. Last week and the week prior, there's definitely been a lot of like Brexit news and the talks. If you guys have been watching the news, Brexit is not over, guys. I want you guys to understand one thing. Brexit is not over. Brexit hasn't even been completed yet, right? Great Britain has still not officially separated from the European Union. So that separation has not been officially made yet. So until that happens, there's still going to be news. There's still polls that are going on with it. Last year, it wasn't just a one and done thing. I want you guys to understand that. So very similar analysis to USD Jappy. I mean, both are looking at a weaker yen. And that's that. I don't really have a whole lot to talk about on this pair. It's very clean price action. Now looking at entering this trade, there's different ways to trade this, but obviously we can see we have a we have some resistance right here from the breakout. So we could be looking at something very similar to USD JAPY, where we break out through its current resistance, a little bit of a retest, and then looking to move up higher, with our long-term targets at a potential double top, if not higher. But if you guys have been following along, you guys have been watching the weekly webinars, and we were doing them on a regular basis for months and months and months now. I have said that at some point this year, we're probably going to see pound yen move into the 150s. Okay. And I still think that that's very possible before 2018 happens. So both of these obviously are swing opportunities, right? We're going to be looking for, stops down in this area, or maybe a little bit tighter stops with, take profits somewhere around this area or higher. Okay. These are all swing trades that we're talking about right now, or long-term trades. All right. So pound yen, USD JAPY, and the final pair that I want to look at is gold. All right. Gold is at a pretty interesting level as well. I'm going to be looking at possible shorts on this pair. Going to be looking for some dollar strength. And that's going to in turn create some gold weakness, some Euro USD weakness. I'm not going to really look at Euro USD because I'm not a big fan of the price action right now, but long term, I do think Euro USD is going to continue moving lower. But this 112.60.34, you could just call it 112.60. This red line pretty much right here is acting as pretty significant PRZ. Obviously, you guys can see just from a technical standpoint, we have a pretty nice top right there, resistance. We had a pretty nice resistance bull flag before it broke through. On the opposite side, when it came back down, we had a bear flag acting as support. Okay, and then we had another bull flag acting as resistance, and then we had another bull flag where we saw a little bit of support once we were above the 1260 level, and right now we are coming back into this level. I think that this pair, we should watch what happens at this level. And if we see a rejection in this level, maybe a little bit of like an evening star or something like that, bearish engulfing candle, we could be looking at going lower towards like the 1230 area. And this also works in part with USD JAPY. If you guys are not familiar with correlations, if you guys are just kind of getting into trading, make sure you guys write this down in your journal that gold has a very strong negative correlation to USD JAPY. All right. Meaning in layman's terms, that is pretty much more than 50% of the time. If you see USD JAPY go one way, you're going to see gold go the other way. They pretty much do the opposite of each other. Now, of course, this is a generality. I said more than 50% of the time. It's not going to be 99% of the time or 100% of the time, right? But most of the time, they are going to move opposite to each other. So that definitely gives us some nice correlation and conviction to be selling gold with looking at buying dollar yen. So that is it for this week, guys. I don't want to bore you guys too much to death. Pretty much all the other pairs that we have on the charts over here, just the price action is not as clean as these three pairs. And I don't want to waste your guys' time just going through them and saying that I don't see anything. I'd rather just give you guys the most amount of value in the shortest amount of time. So if this analysis, let me go ahead. If you guys have any questions, feel free to throw them in the chat. What's the break for GJ again? We'll go over that. Let's go through that right now, Alex. So GJ, we have this top. I'll actually mark it out with a red ray right here. You can see pretty much 142, the 142 level that we see right here. Once that resistance is broken and let's say maybe on the daily or the 4 hour, we see a nice little bit of a bounce in this area, we're looking for longs. Very, very, very similar to USD JAPY. They're both right at these resistance levels. You look at pound yen right there, and then let's look at USD JAPY right there. We have that resistance just a little bit above where current price is at on both pairs. These both have some enormous, very strong support trend lines. So there is definitely a lot of conviction to the upside on these pairs. And, I think that also gives us some good clues to which direction gold is going to, which direction gold is going to go. So that's it, guys. I hope this analysis helps you guys. Don't I know it's Sunday, guys. You don't have to jump into the markets and be taking trades right away. It's not, once you guys get into trading and you really start to understand the Forex markets, it's all about survival in the markets, using risk management, waiting for those perfect opportunities, those setups, and taking them, right? You don't have to be a perfect trader. One thing I just want to actually point out, guys. So this is just kind of my little last education spiel. I actually went over this in the premium group last week, but I just want to show you guys, some people say, okay, you can be profitable winning 4 out of 10 trades in the market. And some of you guys might be asking yourselves, how can you be profitable if you're only winning 40% of the time? It goes back to risk management. So I just want to show you, just do one quick thing and then I'll let you guys go. But this is super, super important if you guys are new to the market, so you guys can understand the power of risk management and risk reward ratio. So let's go ahead and let's just take a scenario of 10 trades. All right. So if we took 10 trades, all right, and we're talking about, oops, sorry guys, my handwriting is absolutely horrible. Now let's take 6 trades that you lose and 4 trades that you win. Okay. So we'll put an L right here and we'll put a W for winners. Now, if we're using at least a 1 to 2 risk reward, that means that our reward that we're aiming for, our take profit, is always going to be at least double what our stop loss is. So let's just use this example. Let's just say that your risk reward is 2%. So we're going to stay with 1 to 2, but let's say you're willing to risk 2%. That means that you're willing to risk 2% to gain 4%. Okay, so using this scenario right here, if we lose 6 trades, all right, that's going to give us a gross, okay, we'll just use a G, a gross loss of what's easy math, guys. What's six trades times 2% loss? What's that gross loss? That is a gross loss of 12% of your account. All right, now let's go to the wins. The wins, obviously simple math, guys. If we have 4 trades that hit our take profit out of 10 trades, 4 times 4, what is that? That's a gross win of 16%. All right, so do some simple math. If we lose 12%, but we win 16%, our net gain on a 40% win rate is still 4% gain of your account. All right, 4% gain of your account. And that's with a 40% win rate. Okay, guys, in our premium group, we're averaging, depending on the week, around a 60 to 70% win rate. Okay, so I mean, you're looking at, if you can master risk management and you can get past the psychological part of not risking your entire account and going, for trying to double your account on one trade or whatever, you guys have in your head, and you just focus on the risk management, risking 2% or less on your trades, but you have a good risk reward, at least 1 to 2 risk reward on your trades, then you're going to be able to survive in these markets. And last thing I just want to show you guys real quick, and then I'm going to let you guys go, is I'll drop the link actually for you guys, but I want to show you guys just the power of why, if you guys are new to Forex and you guys are just getting into Forex, and I think really what it is social media really messes with people's heads, and you think you have to double your account. Thing that I always never understood when people get into Forex is, why do they treat Forex like gambling? It should be treated like stocks, right? And when let's say you had money with your stockbroker, right? You aren't going to call up your stockbroker every single day or every single month asking them what's the gain, right? You're going to sit with them, a bi-yearly thing, maybe twice a year, 3 or 4 times a year. You're going to sit down and you're going to look at your growth, because you guys have to understand that Forex is long-term investing. It's not, okay, turn $1,000 to $10,000 in 1 month. You will always fail every single time. So I just want to show you guys this. So some of you guys that might be new to Forex, you kind of understand the power of Forex long-term. So that way you can stay in the game as long as you can. So let's take $1,000, guys. Oops, I have to use a touchscreen keyboard because my computer is a little fried right now. Let's take $1,000. All right, starting balance of $1,000. And let's say you only increase your account by 10% per month, right? That's only 2.5% per week. Okay, very, very reasonable. And let's say you do this for 5 years, okay, 60 months, right? Let's go ahead and click calculate. Guys, that is a huge number. That is $304,000, 481 cents. $481 $304,481.64. You turned $1,000 into over 300 grand in a matter of only 5 years. Okay. Now, if you continue, let's just go crazy for a second. Let's say you did this for 10 years instead of 5 years. You started with $1,000 and you go for 10 years, right? 10 times 12 months is 120 months. Calculate. Guys, this number doesn't lie. Numbers don't lie. That is $92,709,068.82 in 10 years with $1,000. And you're only growing at 10% a month. Okay, so I hope that even if just for one of you guys that are listening to this right now, if a light bulb goes off in your head and you really start to understand that, wow, this is long term, you go and look at the chart. This will show you every single month. You don't grow your account a lot right away. You have to compound your money, and that's the secret. Look at months 1 through 12, right? Your first year, you only go from $1,000 to $2,800. You only make $1,800, $1,800 in 12 months. And so some of you guys, you aren't happy with that, but you don't understand that if you just continue to do it and you continue to do it, it compounds and it grows. And I mean, ask yourself this, even if you didn't make $92 million in 10 years, if you made 10% of that, was it worth that patience? Was it worth waiting around? Is turning $1,000 in 10 years to $9 million worth it, in your opinion? I think every single person listening to this is saying absolutely yes. I think every single person in here probably knows a family member, a friend, or somebody in your life that's been working the same job for 5 or 10 years, and maybe they're making a little bit more per year than they used to be. This is the power of Forex, guys, and this is why so many people end up leaving Forex, is because they don't understand that it is long-term investing. You have to treat Forex like stocks. You aren't going to get returns in 1 year, 2 years, 3 years. You have to be consistent for years and years and years and years. So you have to make that decision inside yourself. Are you going to be all in or all out? And 10% a month is nothing. You can be working a completely full-time job, 40, 50 hours a week, and still be making 10% a month on your account. It's because you don't have to trade every single day to make 10%. But there's social media out there telling you, okay, I need to flip my account. I need to make 100% in 1 month. Guys, you will fail long-term because that's not a consistent goal. Keeping something reasonable where you can compound your money over time is a consistent goal. Even if you did 5%, right? Let's take 5% for 10 years just to play around with this. You guys can play around with this calculator. I'll go ahead and drop the link, but even 5% in 10 years, that's still $348,000. And you started with $1,000, right? How nice is that you made $347,000 on your investment in a matter of 10 years, right? Then you can take that money and you can really go ahead and leverage the markets when you have that type of money. Because obviously after 10 years of trading, you're probably going to be pretty good at it. So that's my spiel, guys. I hope for at least one of you guys or two of you guys in here, a light bulb goes off, and that's really what I got for you guys. So I don't want to take up too much more of you guys this time. I don't want this to run too long. I'll go ahead and through the chat real quick. Don, you see gold, a 1250 test, then up to 1263. Sure. Yeah, definitely. I mean, everybody has different opinion. I'm just letting you guys know my opinion of the market. I could be completely wrong. That's just my personal view. Throwing it out to you guys. Joseph, you said keep going. Yeah, man. Hopefully that's some good information for you guys. And Alex, you said the GJ break again. So we're looking for a break of 142. All right. If you still need a little bit of help, go ahead and shoot me a message. I know you're a premium member. Shoot me a message in Slack, or go ahead and watch the replay. But I'll throw the replay up for you guys. I'll give you guys all the links for it. I hope this was valuable information to you guys. If this helps you guys out, drop a like, follow us on Facebook. Of course, we have our Facebook page, our Facebook group. Follow us obviously in Telegram throughout the week for different trade ideas. But let's keep killing the markets, guys. Let's take advantage of these setups, and I hope you guys have a great week. And if there's any questions that you guys have, feel free to reach out to myself. Other than that, have a great week, guys. I'll talk to you guys later.